Papa Powell shocked the markets on Wednesday, December 18th, when the FOMC cut interest rates by 25 basis points, but signaled a likely slowing pace for rate cuts, leading to a bear's dream as the market sold off. But by Friday, the bulls were back in full force. Stick around as we discuss how you could have caught these portfolio growing moves and cover everything from SPY to TLT to individual tickers like Micron Tech, Exxon Mobile, and a potential 3x move on Microvision. Nothing I'm about to share is financial advice, so please seek out a licensed financial advisor before making any financial decisions. Welcome back, cool cats. We've got a lot to cover, and if you're interested in how you could have caught the 10x move on Friday, stick around because I'm going to link the how-to video I made for that at the end of this video. I shared before the FOMC interest rate decision on December 18th that the market was indicating a major breakout in either direction, and I gave pattern targets for both of that based on this symmetrical triangle pattern that was forming right into that decision. The initial pattern target for this pattern was somewhere around 597, but after Papa Powell shocked the markets by indicating the Fed was likely to decrease the rate of interest rate cuts, the market had to quickly reprice the recent exuberance, and we far overshot the downward pattern target. This line in red is the main resistance line that goes back to basically October of 2007. And when we broke that right around 605, we started a steep descent downward. And I've covered this medium-term channel, this ascending channel in blue in previous videos. We even broke the support line of that right around 594 and just continued lower, but stopped when QQQ hit the same support line of its own ascending channel. After briefly wicking below it and getting down to about 512, it pushed back up right around above 515. And if we take a look at the SPY 600 strike puts, we can see that this went from, around 180, give or take, all the way up to over 1800 by the end of the day, which is a 10x return. So any amount you put in, if you traded this correctly, you could have turned 1,000 into 10,000, 10,000 into 100,000, so on and so forth. Then on Friday, we hit the main support line on QQQ right around 506. And this support line in orange goes all the way back to January of 2023. And I go much more in depth on how you could have traded this in my how-to video linked at the end of this one. But we could see this bullish divergence that formed here with a higher low on the RSI versus a lower low on price, indicating an imminent breakout. And if we take a look at the IWM on the 1 hour time frame, we see the same bullish divergence that happened as well as the same pattern. And that pattern was targeting a move of around 224, and it actually peaked just to about 224.60. If you followed my analysis that you knew that Dixie was likely headed to 108, breaking out in a major way, as Jay Powell indicated the markets may have priced in way too many rate cuts for 2025. Dollar strength has a major effects on the market, so we always want to keep an eye on it. And we can even see that we had this bullish channel for the Dixie. It was going up within it for multiple days, broke below briefly, and then got back up. And even on the RSI, on the 2 hour time frame, we could see kind of a similar channel that was going down, but it was following along that path just the same. And I can say the same thing of the VIX. This VIX pattern target was targeting around 20, and I've been sharing that multiple times. And then we finally got the breakout, and it went way beyond that, not from just in 20 to over 28. And then we got a pretty sharp pullback and then another pump the following day as Dixie continued to move a little bit higher. Even on the ADD, my favorite market breadth indicator, you can see that the overall market had broken below this ascending channel in yellow. It had been in for weeks, retesting previous support, then acting as a resistance twice, here and here again, creating a double top right into the FOMC on December 18th. This move down, however, led to an extremely oversold market, so we were very likely to bounce. But I'm going to zoom in just a little bit so you can see this. This makes me very hesitant to grab at least longer dated calls at this moment in time, because this is a rising wedge pattern after a strong impulsive move. So I think there's a very definite possibility the daily ATR, the average 2 range right now, is still pretty high. So there's a very big likelihood that SPY could pull back and QQQ could pull back pretty sharply. And I have to say, if you see multi-week patterns on Dixie, VIX, and the ADD, you have to ask yourself, what could they mean for SPY and QQQ, and what trade should you plan around it? If you're getting value out of my channel, please help me reach at least 1,000 subs by my birthday in April. And I know everyone says it, but a little tap on that like button goes a long way for the algos. Thanks in advance. So where are we headed from here on SPY, QQQ, and IWM? As of right now, I don't see any clear patterns set up on SPY. But using basic logic, we can see we had broken way below the lower Bollinger Band here. We're back above it now, but we're below this previous support line of this ascending channel that we were in. And you can see that we rejected off of the baseline of the Ichimoku cloud on the daily time frame as well. This previous support line will likely act as resistance, but if we can get back above it, and we'd have to get back above that baseline around 595, there's a potential we could fill this gap and come all the way back up to around 604 to 605 and retest this previous resistance line. Alternatively, if this ends up being just one giant bear flag and we take a measured move from here to here and drag it down, this would place us at hitting support on the main big channel that I've been covering in multiple videos. This in light blue. This is the main ascending channel that should continue for at least the next year or two. And if that were to happen, we could see SPY come down to around 569, 570, 571, wherever it were to hit, and that would be a potential extreme buying opportunity, assuming that this line holds up as support. And we would see something similar on QQQ. So we could potentially fill the gap coming all the way back up to around 535 to 536. But if instead this rejects and it heads down, that measured move would have it coming down to somewhere around 497, 498, let's say 500 even, because it's a good psychological level. And it would also be meeting this long running key level that I've covered in previous videos, above which the market is exuberant and below which is when the market kind of calms down a little bit. So the same thing, it could potentially be a very strong buying opportunity. And on the IWM, I have to zoom way out for you to even be able to see this, but you can see we have a supply zone here and a demand zone here that goes back for many years. We're very close to this demand zone on the IWM right now. And I'm throwing up all my indicators for this. We've got the Ichimoku cloud, we've got our Bollinger Bands, our moving averages. Everything is up here because I need you to see this. We are currently below daily cloud support on the IWM, which is a bearish sign for IWM, as well as we broke out of this bullish channel that we had been in for multiple months. But on the flip side, we're very close to the 200-day simple moving average and this demand zone. So we potentially could see further sell-off on IWM if the cloud and this 100-day moving average acts as resistance around 222 to 223. It potentially could come all the way back down to around 214 to 215 and then get a pretty strong bounce. So this is amazing to me. We're looking at TLT now. I had shared before this falling wedge or potentially descending triangle pattern on the 2-hour RSI for TLT, and I said that TLT was indicating it wanted to break out soon. And look how we broke resistance on the RSI, came up, pulled back, tested that resistance, now acted as support, and this one day we did get a bump up. This is the day before FOMC when Dixie had pulled back a little bit and TLT bounced, so it went from around basically $90 up to about $91. But TLT is still in a downtrend because Dixie was in an uptrend. So it hit this resistance, rejected, and then rejected off of this main long-standing resistance line and rejected very sharply. So obviously TLT right now is in a downtrend, and it's hard for me to be bullish on TLT while Dixie is still this strong. And I haven't shared this before, but I'm going to share it now. If we do go into that big R word and people lose a lot of jobs, you better believe that the government is going to turn the money printers on. And even if they cause the Fed to monetize our debt, you know what that's going to do? It might lower short-term interest rates, but the Fed has zero control over long-term interest rates, which is what TLT is based off of. And I have to wonder if the bond market is sniffing out the same. All right, a friend and fellow trader requested that I analyze Micron Technology. So this is what I'm looking into right now. This is out on the weekly time frame. We've got all of our support and resistance levels charted, demand, and you can notice that there's this very bullish channel here in orange that has been going on for many, many years. When I zoom in a little bit more, you can even see this line here in light blue that kind of separates the highs from the lows. Either you're kind of above it or below it. And then there is this main resistance line in red. And it's no coincidence that our recent all-time high on this stock actually hit that line and rejected sharply. But for anyone that is bullish on this stock, there is definitely hope. Because look right here, this is that support line right around $80 a share, depending on where you would hit it. We bounced here right around $84 to $85 a share. I could potentially see us coming up to maybe around 97, 98. If this acts as resistance, we could potentially come back down again, potentially double bottom and hit around $82 to $83 a share. If this support holds like it has in the past, we could really likely see this coming all the way back up, at least hitting previous all-time high around 157 to 158. And if it were to break through that, it could come back up to around 170, 172, maybe 173 per share. I wish I could say that I see a clear pattern on this, but really the only thing I see right now was this period of consolidation that it went through for multiple weeks and then finally shot down. But this does seem to be acting as pretty strong support. Microvision is another one that I've analyzed. This one's actually been on my radar for a little while, and I have a few shares in my Moomoo account. And I'm about to show you why. So I went through on Thinkorswim, I charted all our support and resistance levels, all our supply and demand. We can see how for multiple months, Microvision was stuck in this range. It shot down after breaking out of it, hit a very, very strong support level around 15 cents and came back up and came back into a range. It consolidated for a few weeks. You can see the symmetrical triangle pattern there, and then finally broke out again. Now, what I find interesting about Microvision is that it has a very well-defined pattern of behavior. So you can see, look at these orange lines. We have a well-defined strong resistance and a well-defined strong support. And then in between all of these moves, you have these resistances that form. And every time it forms these little small downtrends, so it'll come back up, hit resistance, come down, come back up, hit resistance, come down, until it hits this main support line. And it's done that with all of these different resistance lines. Right now, notice this, it broke this resistance line. It's almost touching support. So as for now, it treated this previous resistance as support. We got a little decent rally. I mean, it went from about, 80 cents all the way up to about $1.15, $1.16. It could go a little bit higher, but honestly, I think the optimal entry, if it hits it, would be right down here, because we have this support level around 55 cents and this main support level that has made this bounce every single time before this is meeting right around 55 to 56 cents as well. So if MVIS gets down to that, I would absolutely be a buyer, because I think there's a very high likelihood it could go from about 55 to 56 cents all the way up to about 250, which would be about a 5x return. And for something this cheap, you could buy a lot of shares. Exxon Mobile is another one that's on my watch list, and I actually bought a call contract on that in my IRA. That's not financial advice and that's not a recommendation, but look at this main support line that has lasted for many, many months. Every single time we've touched it, we've bounced. We've got the resistance line up here, and every time we've touched it, we've rejected. So when I zoom into the daily time frame, look at this. Every single time that we get to this support line, we get a bounce. It is a little bit tricky right now because as we notice over here, we recently broke below that support line, but I'm hoping it's only temporary because right below that support line, you know what this is? This is a demand zone. Now this demand zone technically could go all the way down to about $95 to $96 a share, but I've got a feeling that this was kind of like a move that was just overextended because we had so much momentum to the downside. I mean, you can even look, we had this very well-defined descending channel, and then we even broke down below the channel. I'm hopeful that this was actually a capitulatory move, and that this volume right here, this kind of light blue column, that's the volume. I'm hoping that that is confirming volume that institutions have gotten in here. And from what I've heard, they have been getting in. And you can even see here where I drew these multi-day patterns. We had a falling wedge here with a pattern target right there. It broke out just a little bit, but obviously never met that pattern target. Then this is the main falling wedge that made me go, you know what? This is a falling wedge right into support, right into demand. This is where I'm going to get back into that call. The pattern target for that is around 108.70, which would actually push it above this descending channel and make it look a lot more bullish. And just to put things into perspective as to why I'm actually willing to take the risk on this trade, from right where we are right now, about 106 per share, if we get back up to previous all-time high and back to this previous resistance line here in red, notice how they overlap. We could go from about 106 all the way up to about 125 to 126 per share. And the really cool part is, if this pattern ended up being an ascending triangle and this broke resistance to the upside, the pattern target for that is all the way up to about $160 a share. But always keep in mind that resistance, the first touch of resistance, you're almost always going to get a rejection, and the first touch of support, you're almost always going to get a bounce. And I would just want to quickly mention Intel. It absolutely is still on my radar. If this ends up being a falling wedge pattern, this potentially could be targeting going from around $19 a share all the way up to about $42 to $43 a share. I covered this in my last video. Alternatively, though, if things don't play out for Intel, maybe they don't get the government support that people think they're going to get, it could come all the way down to about $7 a share. This is what this pattern could be targeting to the downside, and it would be breaking through a lot of demand and previous support levels to do that. Happy holidays and best of luck, cool cats, and God bless. Here is the link I promised, and please stick around for today's trading rule to live by.